guys, good afternoon and welcome to Your Stocks. I'm Pavitra, with me is Ekta as always, and we've had a lot of queries which have come in. We're going to get to all of that in just a bit, but first up, a look at the markets which are holding right now at that 19,700 mark. We've really not done much in the past 3 hours. It's been pretty much at this level. What has seen a move higher is the banking pack. So that's up 130 points right now with names like IndusInd, HDFC Bank, ICICI Bank, all of them at the high point of the day. And another, good part of the market is the broader markets, right? So the mid-cap index holding up 0.7% higher. So all in all, it's quite a good-looking screen like that today as we kick things off.
Hi, Pavitra. Yes, absolutely. And, the broader markets are showing that little bit of outperformance again. So up around 0.7% currently for the mid-cap index. And we have an advanced decline ratio, which is definitely positive. It stands at around 2:1. So let's get going. A lot of questions lined up in the next 30-odd minutes. We have Kush Bohra, founder of kushbohra.com, joining in to talk about the fundamentals, the technicals, and Shahina Mukadam, who is an independent market expert, to answer all of your fundamental stock queries. Kush as well as Shahina, welcome to the show. Well, let's get going in terms of the first question that we have. We have K. Karthikeyan, who writes to us from Telangana. 150 shares of Infosys is what he holds at around 1350, which is his buy price. He's a long-term investor of 5 years and above, and he wants to know whether he should hold or sell his positions in Infosys. Shahina, let's start with you. Well, Infosys obviously has been in focus on account of its guidance, but overall, what would you assume from a 5-year perspective? Is it a hold or a sell?
Ekta, I believe that you're absolutely right. The softness in the stock is because of the guidance, and only because of the guidance. And also there is some concern as to the near-term growth that is likely to hit all IT companies across the board. Infosys is no different. But at the same time, for a long-term investor with a 5-year holding period, I believe he should hold it, and he could probably keep a stop loss if he likes, to reduce his loss if any. But he should continue to hold because, they have clearly mentioned, as we saw in their last annual report, that digital is likely to continue to drive their revenues in the longer term, medium to longer term. And so I believe that valuations also at about between 22 to 25 times, depending on what they report. I don't think it's too stretched 1 year forward. So one can continue holding.
Okay, one can continue holding. Let's also ask Kush what he thinks. Kush, we saw that big move higher in Infosys right before its numbers, around 10 days before, and then it gave up that entire 10%, right? How would you look at this one now?
The day the results were announced, the stock actually hit a low. So, what the market is saying is that, perhaps the worst is priced in for now. Although the guidance, effect could play out, my suggestion is, he's bought it at current levels. Given the time horizon, it's not a bad idea to have, like an SIP in the stock. We all know that, near-term pressures are there. But, if I look at the long-term chart, we don't even have to look at the long-term charts, right? We know what the kind of wealth creator it has been. So my suggestion would be, this is a very good level, to enter, which is, enter at, and continue to build an SIP into this. I won't be surprised that, the bad news captured, the low made on the day of the result. The stock could perhaps, rally higher even in the near term.
Okay, got that. So I think both of our guests are agreeing that this is probably one that you can hold, considering that you have this kind of time horizon. But let's get to our next query as well. Sheetal Jain writes to us from Chandigarh. She holds 30 shares of M&M, bought at 600. So that's a very attractive price. The stock is currently at 1472. Now, she's a long-term investor as well and wants to know whether she should hold this one or take some money off the table. Shahina, I want your call on, M&M and how you think this one is likely to, fare from a longer term perspective. Of course, there's also been focus on this with respect to what they're doing with RBL Bank. So come in on that as well.
Yeah, actually, the dampener on the stock is basically because of the investment in RBL Bank. So, if they do, invest in a big way in RBL Bank through M&M, yes, then it's going to take a toll on its return ratios. And, that is a concern that is there. But as of now, since they have said it is just for a financial investment, one can continue to hold, or even you can partially book profits, because I think the core business is doing well. They are talking of investment in EV. So all the positives are there. There is an overhang of negatives. So, possibly you can hold half and book half, since the investor is making a bit of money.
Yeah. Kush, what would you recommend sitting on a good level from the time she's bought? So what would you recommend technically?
slightly a divergent view here. If I look at the longer term charts, the stocks actually rallied quite sharply, and it was actually on, the overbought territories, in the, in the long term charts as well. So this dip is actually not entirely surprising. My suggestion would be, if money, is not, an urgent need, and if she is, given that she's got a long term horizon, it's not a bad idea to buy these dips as well. The stock was close to 1600 levels, dropped almost up to 1400, just mild recovery from there. Given the time horizons, this is the kind of stock that you'd want to buy more of, and the dip that you should capitalize on. So from my perspective, add more of M&M in this fall. If at all she's looking for a stop loss, then 1350 is where I would place my trailing stop loss. In case the stock goes below that, she'll still be in a handsome profit. But overall, the stock is in a bull run, and it's not a bad idea to add more to her investments.
Okay, all right. So that's the view coming in on M&M, a bit divergent there. But let's get to a query about another frontline stock which has been in focus. Shruti Tripathi writes to us from New Delhi. She holds 50 shares of ITC, which he's bought at around 300 rupees. So she's sitting on a profit as we speak. Considering the demerged hotel business, she asks whether to stay invested or book her profits and exit. Well, that will be the big trigger that the street will be watching out for in terms of, once it takes place, etc. But what would you recommend, Shahina, in terms of the demerger of the hotel business, what it would mean for ITC, and what would it mean for a shareholder such as her?
Well, I think, the stock price correction is a bit of because the investors have been a bit disappointed. So, the upside that you were factoring in for a demerger is a bit delayed, but it's not gone. So basically, this is the first step, when the subsidiary is created. And I think a lot of analysts are valuing this subsidiary when eventually it lists, in a couple of quarters or whatever timeline the company decides. It could list around between 20 to 30 rupees. So, and then you have the FMCG business. So as a long-term investor, as of now, I would definitely not sell. You hold it, you review it when the first demerger happens, when actually it lists. I think, ITC as a business is generating a lot of cash, and current levels, I would not sell. I would hold for the whole process to actually play out and then take a call, review it.
Okay, so hold ITC for now. Kush, how is this one looking on the charts? Of course, we've all been talking about the kind of move that's come through in ITC this year. I mean, it's up 40%. But would you agree with Shahina? This is one to hold?
Oh, absolutely. In fact, from memes that the stock is not doing well to the pain that the stock is not giving any dip to re-enter or make a fresh entry. Well, that's where we are. The stock actually made the low when the news was announced, probably a day after. But from there on, it's been steady and steadily on the uptrend. So this is definitely something that you'd hold on to. Again, if you've been looking for entry opportunities, then this is perhaps a good time to enter ITC. I won't be surprised that if we see those levels of 500 and beyond as well, in the coming weeks or probably a couple of months time. So for me, definite hold on ITC.
Okay, hold on ITC from both of our guests. By the way, Castrol's numbers are flashing on your screen. So it's the net profit is up around 9%. That is coming at 225 crores. That is the only figure that we have. So let's actually wait by for some more details on that one. But in the meantime, our next query is on M&M Financial, where our viewer has bought at 120. He wants to know the future prospects of his investments and whether it makes sense to keep on holding this stock. That is on M&M. He also has 50 shares of IOL Chemicals, which he bought at 70. Shahina, coming to you first on M&M Financials. I mean, I know we had the results just recently. We reacted to it this morning as well. And it's been quite disappointing, right? Especially that sharp contraction that has come through on the NIMs. How do you look at this stock from here on?
Well, I think it's a decent, hold even at current levels. Because provision coverage is decent, 60%. NIMs are not bad, 6.8. Yeah, there is a bit of disappointment, but I think the overall growth numbers on a YOY basis also were pretty decent. Valuation is not expensive at 1.5 times book, around that level. So I would continue holding. I don't see too much of an issue, and especially given the aspirations of the group to get into banking, I think if any company would benefit, it would be M&M Financial. So at current levels, I would continue to hold. On the other hand, IOL, I think one can book profits. Basically, it's the major product is ibuprofen, and the price of ibuprofen have remained soft in the last couple of months. And so I think there is going to be limited upside from here. So one can switch to a large cap company. IOL is of course a smaller company. So in the pharmaceutical space, now there are other companies which are doing better in terms both of price as well as performance. So I think one can switch from IOL.
Okay, all right, Kush, would you have a view on the technicals of M&M Financial as well as IOL?
Oh, absolutely. In fact, a similar view on both the stocks, slightly different reasons though. I mean, IOL CP, if he's been holding, I'm sure he's seen levels of 800, 850, and then the stocks actually, almost half to about 400. So it's not a bad idea to take some money home. But the stock's actually attempting a revival. So I would suggest take partial, book partial profits. Hold 50%, around 450 is where he could book the rest. There's a congestion zone there. So I think about book 50%, 450 is for where he can hold on to for the next 50% lot. But I think that's one stock. This is one stock that he can gradually get out of. M&M Financial, very strong run. Recently, we've seen a dip, but a very similar view here as well. Take 50% money home, rest, hold with a stop loss of 285. If the stock breaches that, then it could actually slide to 250 and 220 kind of zones. So as I said, in both of them, same view, book 50%, hold the rest.
Okay, got that. Kush, Shahina, we do have to take a short break, but please stay with us because we have lots more queries which have come in and we want your help answering all of those when we come back into.
Welcome back. Well, for the Nifty up around 60 odd points, let's get in a couple of more queries. We have Deepa P, who writes to us from Bangalore. She holds 1,000 shares of Mangalore Refinery and Petrochemicals, which is MRPL, which she's bought at around 90 odd rupees. And she's a short-term investor, wants to know what to do with her holding and what would be a target price, and if she would want to hold it, say, for another 3 to 4 months. So it's a short-term call that she has. Kush, this is directly down your alley. What would you recommend?
Well, looks like a very recent buy. The stock was just about, at 90, 93 kind of levels, recently. From there on, it's seen a slide. So my suggestion would be put a stop loss of 80. That's where, the support zone was and the stock gave a breakout from precisely that level. So 80 is where I would place my stop loss. Once this, round of selling is over, the stock could retest, the similar 90 levels. But that's where I would suggest to exit. So, not looking for too much of a profit, just looking to reduce the losses. 80 is where I would place my stop loss and exit around those, buying levels of 90.
Okay, got that. Shahina, what about you? Do you think this one is worth holding from, a 3 to 4 month kind of perspective?
No, I don't really think so. The numbers were very disappointing. Their gross refining margin was less than $10 versus something like $24, $25. So I think the numbers were very disappointing. And there are a lot of negative headwinds that are there. For example, you have, elections. So you're not going to see price increases. Crude oil prices are going up. You are seeing higher tax that they will be paying. So I don't think one, at least for the medium term, one needs to hold the stock.
Okay, got that. That is on MRPL, both the technical as well as fundamental perspective on this one. The next query comes in from Prakash, who writes to us from Hyderabad. He holds 207 shares of Bohra chemicals that he bought at 127. So the stock is much lower. It's currently around 71 rupees. He is also a short-term investor and wants to know whether to hold or sell this one. Shahina, the entire sort of view on chemical companies has been, shifted a little, right? Ever since the global commentary turned so negative. What would you suggest on this one? Because already sitting on significant losses here.
Yeah, Pavitra, as you said, the whole sector is actually seeing some pressure on margins, on realizations, and Bohra chemicals. It's a small cap, micro cap actually. And it definitely, I think even numbers that are going to be declared are not going to be extremely good or anything of that sort. So I believe that, the investor can exit.
Okay, investor can exit. We also have Naveen Flory's numbers which are flashing on the screen. EBITDA has come in at 114, so this is well below the poll that we had of 170. EBITDA margin at 23.2 is a lot lower than what was expected at 27.4. The stock is correcting, of course. Net profit at 61 crores. This is versus the estimate that we had of 110 crores. So
in
all of
fact,
the
it's a complete top-down miss which has come through. Even in terms of the revenues, for 91 crores, and our expectation was over 600 crores. So it's a huge miss which has come through for Navin Fluorine. And remember that the 52-week low for the stock is around 3,766. So let's see whether where it goes from these levels. But nonetheless, complete disappointment which has come through for Navin Fluorine.
Yeah, Shahina, you want to come in on these initial numbers, and how would you see a player like Navin Fluorine right now? Do you think this entire pack is to be avoided for the time being?
Well, it was the top pick of most analysts who were covering the sector, and valuations also on the higher side. So any negative, and there are negative expectations now that are coming through because of, as we discussed, raw material prices remaining more or less steady, and you have lower realizations. So these factors are affecting chemical stocks, and I think Navin Fluorine, I will have to look at the numbers in detail, but of course they are disappointing.
Okay, all right. So definitely disappointing for Navin Fluorine. Surprisingly, we've not seen much of a reaction which has come to the stock as of now. So down around 0.5%. So maybe we have to wait by and hear the management commentary in terms of what took place this quarter as well. As you can see, the profit is around 17% year on year. We have a disappointment which has come in terms of the revenue. But if you compare it on a year-on-year basis, it's a growth of around 23.5% year-on-year in terms of the revenue as well as the EBITDA. As you can see, the stock is on your screen. Well, Dipesh now writes to us from Ahmedabad. He holds 50 shares of BLS International, which is bought at around 157. So he's sitting on a profit there. He wants to know what to do, whether he should hold or sell this particular counter. Well, Kush, what would you recommend on BLS?
Well, first up, congratulate him on the kind of profits that he's making. Splendid. And, he's holding on to them even now, which is, even more courageous. So I would suggest hold on with a trailing stop loss of 225. That's where the stock had registered and, given a breakout. Now, this will act as a support zone. The momentum sort of building up, despite the kind of sharp run up that we've seen in the last just a month and a half, 2 months, the stock is still away from overheating territories, suggesting that there is a lot of upside left. So I won't be surprised that if the stock sees about 275 kind of levels in the coming weeks. So hold on to this one. 225 is where I would place my trailing stop loss. 275 plus is the target that I'd be looking at on BLS International.
Okay, got that. With that, Kush, Shahina, we're going to wind down on this edition of Your Stocks. But thank you both so much for stopping by and helping us with all of these queries that have come through. We leave you with the market at pretty much the same level, 19,720. So we have moved up a little bit. The mid-cap index up almost 0.8% now. So that's looking extremely solid. Remember, if you have any queries on any stocks, please do write in to us and we will take them up with our experts. And stay tuned because closing bell comes up after this break for the final hour of trade.